Namaste. My name is Sriram from the Commodities desk at Reliance Securities. Welcome to the weekly commodity market outlook. So beginning with, as usual, gold and silver. After a rally of 2 straight weeks, gold and silver prices gave up some gains this week as recovery of the US dollar and elevated bond yields pulled prices lower. Earlier prices did find some support on the back of jobs reports last week, which showed the economy, even though added about 187,000 jobs in the month of August, which was above the expectations. But data also showed rising unemployment and participation rates, along with cool down in the average hourly growth. So market participants grew more confident that the Federal Reserve may have finished raising rates this year. And this also actually capped some downside for the markets this week. So looking ahead for the coming week for gold and silver, we feel that there are no major triggers apart from jobless claims and non-manufacturing PMI numbers, which could definitely move the markets. But the recent weak numbers from China and Europe have definitely pushed investors towards the safe haven appeal of the greenback. And this has from bullion and the equity markets, and this can continue going forward, and this will weigh on sentiments. US Treasury yields have also gained last week, and after comments from a Fed official who indicated that the central bank could continue to hold interest rates at higher levels for extended period of time, and that can also keep the upside or any meaningful upside limited for the gold and silver markets going forward. Additionally, physical demand has remained significantly weaker after data from Perth Mint's August gold silver sales dropped to its lowest since February 2020, suggesting that there is lack of any physical demand in the market. So further correction based on the weak fundamentals and slightly weaker technicals as well cannot be ruled out going forward in the coming week or so. On the charts, we feel MCX Gold October key supports are at 59,110, and a break below this could pull prices all the way back to 58,850 levels. And on the upside, we feel key hurdles remain at 59,500 and 59,700 for the markets. Internationally, we see the COMEX December range for gold remaining between $1,940 on the lower side to $1,980 on the higher side of things. Moving to crude, both domestic and international crude prices gained this week after announcement by Saudi Arabia and Russia that they will extend their respective crude production cuts until the end of this year. Saudi Arabia said they will extend the production cut by again 1 million barrels per day through December, which will hold the Saudi Arabia's crude output at 9 million barrels per day, which is the lowest level seen in over 3 years. Of course, additionally, data also showed that US crude oil inventories fell by about 10.58 million barrels in the latest week. In the previous week, while Cushing, Oklahoma delivery hub also witnessed a decline of about 1.5 million barrels and also lent support to the crude oil markets last week. Earlier in the week, dollar had rallied, and disappointing stimulus measures from China, which could reduce demand for the fuel, capped the upside in the markets. But markets after the steps taken by the OPEC, markets will be worried about the supply shortage going forward, and that could continue to push the prices higher. Looking ahead for the coming week or so, supply concerns will remain the key trigger for the markets. However, investors will also be worried about the global economic conditions amid soft manufacturing and services numbers in major economies, and that could weigh on the demand outlook for the fuel and will cap upside. Weekly inventory numbers are scheduled today, starting with API after market hours tonight, and EI data scheduled for tomorrow. So markets will remain range bound with a slightly positive bias. On the charts, the key hurdle for the NYMEX October contract will be at $88, and a break above will push prices all the way high to $94 on the upside, and on the downside we feel 84.50 and 81.50 remains the key support for the markets. Domestically, the range remains between 6,800 to 7,400 this in the coming week. Briefly on natural gas prices internationally and domestically continue to remain range bound. Looking ahead, we see continuous range bound price activity, and again weather will be a key trigger again. Recent projections for weather have suggested slightly cooler weather incoming for the US side of things over the next 2 weeks, and upside will be capped because of that. So markets will be remaining range bound, and inventory data will be key trigger for the markets again this week. And so the range between so the range for MCX September contract is anywhere between 200 to 230 rupees this week. Finally, on the base metal complex, the complex continued to struggle last week. Earlier, fresh measures to support Chinese economy or troubled property sector and softer data in the US side of things lowered expectations that the Fed may not raise interest rates and supported the markets. However, after the brief uptake, markets gave up all its gains after the weak manufacturing activity and the service activity released by China in this week, and so weak demand continues to hamper the real recovery of the Chinese economy, and that could continue to weigh on sentiments going forward as well. Additionally, stocks on the LME warehouses are nearly double levels in the middle of July, having reached 107,425, highest since October last year, and higher stocks also will cap any further upside going forward. Looking ahead, COMEX, copper and rest of the base metals on LME and copper on LME could continue to weaken further this week as worries are on the rise about a China and Europe-led slowdown in global growth. As a result, the dollar is also catching a solid safe haven bid and will put pressure on the prices going forward. There are no major triggers, but ISM non-manufacturing PMI from US and the jobless claims numbers will be the key trigger for the markets. So bias could be range bound to marginally weak if the data comes out positive this week. The range for the MCX September contract for copper is anywhere between 720 on the lower side to 750 on the upside of things. So that's it from our side. Thank you very much for watching. Have a pleasant day and a week ahead. Thank you.